China's factories perk up, but frail intake factors to weak monetary restoration. Beijing. China's financial system confirmed signs of recovery in May after slumping within the earlier month as industrial manufacturing rose all of a sudden. However, intake became nonetheless susceptible and underlined the assignment for policymakers amid the persistent drag from strict COVID curbs. The information, however, provides a route to revitalize boom inside the world's second biggest financial system after businesses and clients had been hit hard due to full or partial lockdowns in dozens of towns in March and April, which includes a protracted shutdown in business center Shanghai. Industrial output grew 0.7% in May from a year in advance, after falling 2.9% in April, records from the National Bureau of Statistics (NBS) showed on Wednesday. That compared with a 0.7% drop expected by way of analysts in a ballot. The uptick within the business area became underpinned by way of the easing of COVID curbs and strong international demand. China's exports grew at a double-digit pace in May, shattering expectancies, as factories restarted and logistics snags eased. The mining area led the manner with annual output up 7.0% in May, while that within the production industry eked out a meager 0.1% boom, generally driven via the manufacturing of new power cars which surged 108.3% year-on-year. Activity Facts paints an economic recovery photo in May, but best a gradual one, said Iris Pang, chief China economist at ING. The authorities is probable to respond to this financial weak spot by means of delivering greater economic stimulus, Pang stated. Chinese shares rose after the information had been launched, with mainland China's blue chips up 1.8% and Hong Kong shares 1.4% higher, in comparison with a in large part subdued consultation for most other Asian share markets. Fu Lingui, a spokesman at NBS, told a press conference that he expects the restoration to enhance similarly in June due to policy assist. However, the global environment remains complex and excessive, he said, highlighting the dangers to the outlook. Our home recovery continues to be at its initial level with the boom of key signs at low degrees, Fu said. Weak consumption, employment concerns that warning become underscored in consumption records, which remained weak as shoppers had been restricted to their houses in Shanghai and different towns. Retail income slipped any other 6.7% in May from a year in advance, on pinnacle of a 11.1% contraction the previous month. They had been slightly higher than the forecast of a 7.1% fall because of the improved spending on simple goods inclusive of grains, fit-to-be-eaten oils and meals and drinks. We need to no longer be overly constructive approximately consumption as the recuperation has been pretty slow. Affected with the aid of repeated COVID outbreaks, slower earnings increase, a careful view of the future expectations, there'll now not be a revenge spending, as human beings have predicted, said Wang Jun, leader economist at Zhongyuan Bank. Sales within the catering enterprise, a sector quite sensitive to COVID curbs, shriveled by using 21.1% in May, as compared with a fall of 22.7% in April. Fixed asset funding, an increase driving force that policymakers was hoping could prop up the financial system, rose 6.2% in the first 5 months, beating an predicted 6.0% upward push but slowed from a 6.8% benefit within the first 4 months. China's property income fell at a slower tempo in May, suggesting progressed consumer sentiment after a slew of easing policy steps taken via cities across the USAVA to reinforce demand. The Facts dispatched stocks of Chinese builders soaring. Employment remained a massive subject, however. The national survey-based jobless charge fell to 5.9% in May from 6.1% in April, nevertheless above the government's 2022 target of underneath 5.5%. In specific, the surveyed jobless fee in 31 primary towns picked up to 6.9%, the very best on file. Some economists assume employment to worsen earlier than it receives higher, with a record-wide variety of graduates entering the workforce in summer season. The valuable financial institution on Wednesday saved medium-term policy price unchanged for a fifth instantly month, matching market expectations. China's cabinet recently announced a broad bundle of monetary aid measures, even though analysts say the reliable GDP target of around 5.5% for this year could be hard to acquire without casting off the zero-COVID strategy. Fresh lockdown fears loom. Fears of sparkling lockdowns additionally loom large underneath the stringent COVID coverage.